Hey everyone, and welcome to this week's version of On the Spot. I'm Zach Strickland, here with, as always, John Paul Hampstead.
Zach.
JP. We got a lot to talk about today. So,
we do.
Obviously the big news, the big story of the week, and how it's impacting the freight market is the coronavirus. Now, the Dow Jones has already reacted and hit anybody's portfolio out there so
bad
far.
For anybody who's long airlines.
Yeah, the airline industry is probably not going to have a great year this year. But how does that translate to the domestic freight market? Now, we've seen volumes. We've seen a pretty standard February so far. We haven't, year-over-year volumes are actually somewhat flat. We have seen this slight increase towards the end of the month, which is pretty standard for this time of year. Capacity, again, prevalent.
Right, loose. Very loose. Outbound tender rejections on a national basis dipped down again. They're sitting at about 5.35%, the lowest all year.
Right.
But not that much change from a week ago where they were 5.6%.
Right. So we're not seeing any dramatic changes yet. We're not seeing that kind of reaction, at least in the domestic freight market that we've seen. But we have noticed some things overseas and the things that are coming into the country. So we track, customs data as well as the spot rate coming from China to North America for both East and West Coasts. Let's talk a little bit about that. What are we seeing so far that's kind of signaling what to expect here in the next week or so?
So the steamship lines, the people who run the container ships across the Pacific Ocean have reacted to falling production out of Asia and particularly China by removing capacity from that trade lane. And they've removed, literally over 1 million TEUs of capacity. At this point, more than they did after the financial crisis of 2008, 2009. But that hasn't been able to keep up with the volume story, which has, gotten cut in half and is still getting worse. So container rates from China to the West Coast have fallen about 22% since the middle of January, down to about a little under $1,300 a box.
Right.
That's bad. If you look at something like total outbound containers on rail out of LA into the middle of the country, so think about lanes like LA to Chicago, LA to Dallas. Those sort of daily volume numbers have also fallen about 25% since February started. So we're seeing it on the intermodal side and the ocean side a lot more than domestic trucking. It's really important to remember that while Chinese imports are quite important to Southern California port volumes, if you're an over-the-road truckload carrier that operates in all the lower 48 states, that effect is going to be diluted for you.
Yes. Yeah, because there is a bit of a translation between getting it from the container to the dry van or
and you're moving freight from you're moving more things that have been produced in the United States. You're moving volumes that are hitting the East Coast ports, whether they're from South America or Europe. You have a more diverse kind of portfolio of freight.
Right. So looking at last year's impact of the Chinese New Year, which is again kind of clouding what we're seeing on some of these rail volumes and port volumes, et cetera. You look at those and there's a big initial hit to international loaded container volumes coming through the rail. So these are your 20-foot, your 40-foot containers. And, it's almost immediate. Once those port volumes start to fall off about 2 to 3 weeks after Chinese New Year. And that's what we're going through right now. We're actually seeing the initial hit or impact of the Chinese New Year, time period. The factories were already kind of slowing down, so we haven't necessarily seen the full brunt of what we're anticipating with this.
Correct. It will get worse going forward in the next few weeks. We are seeing for the Chinese New Year. We haven't seen anything worse than that yet.
Right. International loadeds are still right on. They're actually slightly below what they were last year. But again, we also have this impact of the diminishing impact of the trade war. That's also kind of diluting what we're seeing. Like we can't tell if this is coronavirus related or trade war related, or it's probably more just Chinese New Year, trade war diminishing, and then, of course, coronavirus will actually show up here in the next couple of weeks.
Yeah, the immediate year-over-year comparisons are always kind of misleading.
Yeah.
I liked kind of what Cargo Metrics did, which was take an average of 2012 to 2018 and then compare 2019 to that.
Right.
That made a lot more sense to me, and those numbers look bad, to be honest. So, we're looking at, we're keeping our eye on the West Coast, keeping our eye on Asia. I think one of the biggest risks right now is if the coronavirus does spread further in Japan and South Korea, that's going to make the Trans-Pacific look even worse. Japan is our 4th largest trading partner.
Right.
South Korea is our 6th largest trading partner. They account for together about 8% of U.S. imports. China's about 22%.
Right.
So if that gets cut in half again, that's just going to be another kind of tick down in volumes hitting those ports.
Yeah, and how that translates to truckload, it's not an immediate thing. Last year with Chinese New Year, we saw rail volumes dip, but truckload volumes actually increased. So in the month of March, typically you see a big push of freight. Some of that has to do with construction and springtime volumes.
Yeah. So we're going to see. I mean, I think retailers are going to run down their inventories as long. Another risk I think on the horizon is kind of if the stock market sell-off does spook consumers and people kind of. The American consumer is difficult to spook. We're
very difficult.
we tend to spend our last dollar and then some.
Right.
Unlike the Chinese consumer, which is easily spooked. So, if it depends on how bad the stock market sell-off gets, how bad the kind of news media portrays the situation, how many more nights of markets in turmoil we get.
Right.
Right. But if people do stop buying things, obviously that will materially change the story. So far, there's no reason to think that's happening yet. Things like housing sales, new house
They're
sales
doing great.
are really well. So
again, but the more I think the story here is necessarily how long does the stock market stay down. I think that people have become relatively immune to these violent swings in the stock market, either up or down. It's not necessarily as prevalent in people's minds as it once was. But at the same time, if it continues, and then this is something that that people can feel, especially out on the West Coast where we've had a couple of cases. If this virus does start interjecting itself into our daily lives in some way,
right.
It's no longer just a report. You can actually go and you can see and feel this. Unlike a lot of the stuff that you see on the stock market.
Yeah. To talk about other markets, and sort of looking around the country and seeing how truckload freight's doing. I think places like Harrisburg, Philadelphia, Atlanta are holding up pretty well. We're seeing some interesting numbers out of the Denver market, though, Zach. Do you want to talk a little bit about that?
Yeah, the Denver market has had a bit of a bumpy ride this winter. A lot of snowstorms. I know that's not unusual for the area at all.
No.
But a lot of
snowstorms
them,
in Denver in February.
In February, not the strongest of differences, but you're seeing a lot of snow coming down. The weather pattern is basically shifted to where all these storms come out of Canada and they're just pounding the Rockies. And again, you have to come across I-70 hitting Denver, and there's been avalanche after avalanche. They've shut down I-70 numerous times. I was out there actually a few weeks ago for my wife's work, but they shut down the interstate probably 3 times when I was out there alone. Now they can clear it pretty quickly, but at the same time, it makes things a lot more difficult, especially if you're over the road and you have to stop.
It moves price.
Yeah.
It moves tender rejections and it moves price.
And so they've been actually one of our most volatile markets over the last 3 to 4 weeks due to the fact a lot of carriers are avoiding the area because they get stuck. And lost utilization, especially now with the hours of service being more heavily tracked and monitored, they can't sit on the side of the road while it snows for 3 or 4 days. Which the mountains are far different than Denver.
So Denver is typically, one of our quintessential backhaul markets that people don't want to go into, right? Nothing comes out of Denver. But the snow is making it kind of even worse.
Yes. So carriers that,
And the question is kind of like, will rates move up fast, enough to kind of flip the calculus of carriers to be like, okay, this is now a lane we want to play in.
Yeah, and the rates for Denver are actually, that happens on the front end. So the inbound Denver rate goes up.
Yeah, exactly.
The outbound Denver rate comes down. But strangely enough, the outbound rejection rate out of Denver has been increasing quite a bit.
Interesting. Do we know which lanes that is?
Most of them are coming so a lot of Denver freight, the longer haul freight that is, goes to cities like Chicago and Dallas.
Okay.
Dallas to Denver is actually a pretty big lane. Los Angeles, obviously, to Denver is a big lane. Denver doesn't necessarily go west that much.
Interesting.
It's a very consumption-driven market.
Interesting.
So, because it is growing at a rapid pace too.
Yeah, that kind of makes sense.
Mm-hmm.
You going west would be kind of weird. Like you would think you wouldn't want to build a supply chain that needs to go over the Rockies regularly.
Like I said, it's a consumption market, consumer driven.
It kind of reminds me of like the oil market and the diesel fuel market on the West Coast is like its own thing, because like they get all their oil from the Pacific Ocean and trade like that. They don't ship it from like the Gulf Coast across the Rockies into California. So it's kind of a cutoff.
And
situation.
Also, most carriers will deviate around that. They'll take a southern route or a northern route where the land is flatter, not necessarily as difficult to navigate.
That makes sense. That's interesting.
Some other areas of the country that we've been monitoring, the Southeast has actually had some disruptions over the last week or so. Nothing mind-blowing, mind you, but at the same time, we've had a lot of instability in the Southeast. We watched the Gulf Coast region there towards the Mardi Gras time of year. New Orleans, Mobile, Montgomery all had some significant increases in tender rejection rate, but now we're watching the Carolinas. Atlanta has even had a little bit of a moment there. Chattanooga, where we are.
Yeah, it had a massive freight surge for a couple of days there, didn't it?
Big freight surge, but it didn't really, it didn't show up in capacity numbers until just recently.
Okay.
So the capacity now is a little bit tighter. We had a big exodus. Chattanooga typically runs at net outbound, so it is a head haul market. But it is close to the Atlanta market, and it's right along the I-75 corridor. So.
Right, and so it gets the capacity is kind of getting pulled in different directions.
Correct. But it also can recover relatively quickly, depending on what's going on in Atlanta and the Southeast in general.
What do you think going into the first week of March is going to look like?
So, again, the coronavirus is going to be something we have to monitor. We're going to have to be watching Southern California. Southern California had volumes increase. Strangely enough, I know this is counterintuitive because everybody.
TVI.LAX is actually coming up.
They're LAX, Ontario, both up. Ontario, the second largest freight market in the United States. Combine LA and Ontario together, it's the single largest outbound freight market in the United States. You got to watch that. Just when does the coronavirus, translate into freight volumes? That's going to be the first area that it shows up, because Long Beach and Los Angeles ports are both they're the biggest entryways, especially for that Chinese freight, the Asian freight. Still, even though we have seen some of this transition to the East Coast in the last bit.
That'll be a few weeks after it hits the West Coast.
Yeah, and again, it's very muddy to know when those containers translate into truckload volumes. Right now, the trucking market looks very normal.
Yeah.
We definitely are going to be watching that moving forward. But also, this is not like the coronavirus is not like any event that we've had in our lifetime.
Right.
It's not their hurricane black swan event that you can kind of count on every 5-6 years. This is something brand new. There's no models for it in modern society. I think you were talking about earlier how the CDC has modeled out the coronavirus.
Yeah, they did some simulations in October, which are pretty bad. I think one of the startling and just kind of sobering aspects to this event is that, unlike some of the other black swan events we get, where whether it's trade policy that creates confusion and sort of out of seasonal patterns, whether it's a hurricane, this is going to the main impact of coronavirus is expected to be just profound, demand destruction.
It's going to be but
it's not like
there's going to be some level. We're going to see some degradation in overall volumes, not necessarily like you know.
But I'm saying like if it becomes a pandemic in the United
Yes,
States,
correct,
like
correct.
it's demand destruction,
Yeah,
which is bad for transportation.
The range is pretty wide on what actually could happen here.
Yeah.
We could have this moderated spring followed by a very robust fall, or we could have this long-running event. We don't know yet.
Yep.
All right, well, that'll do it for this week's On the Spot. Stay tuned as always for any freight market coverage as well as updates on what's happening in the world.